Hello, it is Friday, November 3rd, and we have several market updates to discuss today. It was a big week in the mortgage world, starting with the Fed decision to pause rates and followed by their conference in which we were really closely paying attention to the language that they're using. And all told, they basically indicated that things are moving in the right direction. It's going to take some time. They're not forecasting any immediate rate cuts, which none of us really think are going to happen anyways. But they did indicate that they're likely done raising rates. They're going to continue to hold that as an option in case things change. And obviously, if inflation flares back up, we could see them reverse course on that. But the fact that they indicated that they're likely done has caused the 10-year Treasury to start dropping. In fact, we've had a very good week in terms of rates. And then this morning, we got the jobs report, which showed continued softening in the labor market, which is really the thing that Jerome Powell is focusing on right now. And so for them to indicate that they're pausing and then for that to be followed by another report that really reinforces that decision puts us in a place where I think we're fairly confident that we're done with this rate hiking cycle. The market has responded over the past few days. The 10-year Treasury has dropped from 4.92 down to somewhere around 4.52. Which has caused mortgage rates to decrease by about 0.5%. So there's been a meaningful improvement in rates this week. Make sure and let your clients know about it. The jobs report came in at 150,000 jobs, which was well below what was expected. Keep in mind that these reports are wildly inaccurate and they're constantly being revised. In fact, they also today revised the August and September reports downward by over 100,000 jobs. That's a big revision. But the thing that we're looking at in terms of this report is actually the number of hours being worked by employees and the rate at which their wages are increasing. And both of those metrics slowed this week. This month. When we see those things slowing down, that's another indication that employers are starting to back down a little bit on how much money they're putting out in terms of labor. And the reason why Jerome Powell is so focused on that is one of the best ways to measure the pressure on inflation. The more money people are making, the more money they have to spend. If people are making less money, they have less money to spend. And so that's really why they're focused on this metric. That's your market update. Have a great day, and KFA.